Hello, and welcome to a presentation on managing RNI beyond the data. My name is Steve Kleekamp, and I'm a senior supply chain consultant with ROI. Before I start the presentation, I'd like to talk a little bit about ROI and some of the solutions that we offer. ROI was founded in 1999, is a cloud suite specialized burst-enabled Infor Alliance partner and class category leader that works with organizations to reduce cost, increase efficiency, create confidence, and drive success in planning, implementation, and optimization of Infor's ERP and BI solutions. Our philosophy about Infor solutions is centered around business transformation, user engagement, and tangible results created when our projects deliver high quality, team collaboration, timeliness, and focus on mission, vision, and values of each organization that we work with. Our hands-on experience is unprecedented in legacy Lawson through Cloud Suite, Financials, and HCM. Our tailored approach spans the lifecycle of our clients' needs, which means that we meet you wherever you are in your plan to success. Our dedicated and cohesive Infor practice is focused on planning, optimizing, and implementing the full suite of Infor healthcare applications. Capabilities cover operational finance, supply chain, human capital management, and technology automation. In addition to our Infor practice, ROI provides project management and application support services. Our agenda for today will start with what is RNI, who should care about it, who owns it, how to monitor and clean up RNI, and how to get beyond the data. To start, what is RNI? Received not invoiced, RNI, is a liability that's created when received goods are not invoiced. As you can see on the slide, Infor describes the purchase order receipt accrual account, which is where the RNI balance resides, as a temporary holding account for goods received but not invoiced. And it's normal to have a credit balance in your RNI. Basically, anything that's received in a month period that is not invoiced needs to be counted as an accrual. It's when that account balance gets out of control and varies widely month to month when organizations begin to have trouble, and when the aging increases to high levels as well. Why should we care about RNI? One main reason, outside of the financial concerns about recording your liability, is that if you have an unusually high RNI balance, usually indicates that there are issues within your supply chain workflow. That could include purchasing, receiving, and accounts payable. Here are some of the problems that we see that generate these issues. I'll say that one of the things I want to focus on today is the lack of ownership and accountability for monitoring and addressing RNI. This often falls between the cracks because there's some responsibility in supply chain and there's a shared responsibility in accounts payable. And sometimes we drop the ball when these two groups aren't communicating clearly. Who really cares about RNI? Usually it's the finance team that rings the bell that says, hey, there's a problem here. We need to discuss our RNI balance. We believe it's too high. They're looking for explanations, and typically that requires some cleanup. And when I ask who really cares about RNI, I like to say we all do, and you do, because what we've seen in our practice is that virtually every one of our clients that we engage with asks for help on how to manage RNI. The issues and the costs around managing RNI vary widely, and you can see these last couple bullet points on the page. 6 to 28% of invoices contain issues. That's a pretty wide range, and at 28% is also very high. And the cost of processing an invoice, which is usually increased significantly when there are issues, discrepancies, can be $12 to $15 per invoice, up to $40, again, wide variation. But even at $12 to $15 per invoice, it's a pretty costly item. Who should care about RNI? As you can see from this graphic, we all should care about it. from a finance position, it's the visibility and accuracy of your financial data. What is our liability each month that we have outstanding? For accounts payable, it's paying invoices on time and saving time not having to address discrepancies. Similar with purchasing. Purchasing also ends up spending quite a bit of time addressing pricing discrepancies, measure discrepancies, etc., and having to continually touch the same issue over and over for multiple invoices. Inventory control, which a lot of people don't think about as having been impacted by RNI, can be when price discrepancies hit inventory control and are not addressed in a timely fashion. It can actually reduce the inventory's integrity based on unit cost of items and causes an increase in the number of adjustments that can occur due to invoice discrepancies. So we all own RNI, but someone has to be accountable. The main point here is in the bottom of the page. Generally speaking, we're recommending a team approach to addressing the discrepancies in RNI. Large amounts of RNI are resolved quickly when a team approach is taken. There's cross-training involved where the AP team gets to understand a little bit about how supply chain works, which can help them diagnose issues. And the same is true for PO, learning what AP has to do to resolve invoicing issues. Each team member becomes more knowledgeable about all the roles, and you can resolve issues better and more efficiently. Additional benefit to that is that the visibility of RNI remains high for both groups and consistent. So we want to drive our clients to address RNI issues on a regular and ongoing basis with a multidisciplinary team approach. So one of the big questions that we get at every client, or many clients at least, is that who should be responsible for what when it comes to RNI? And overall, we know what the roles for purchasing and receiving and accounts payable are. I tend to stress that most of the work that has to be done in the cleanup for RNI is with supply chain. My supply chain friends don't necessarily agree with me 100% on that, but that's how I approach it. And if supply chain can keep up on contracts, can have a cleaner item master, and clean up other data files, then maintaining and fixing data tables becomes part of the RNI process, and we make sure that we're touching those records when we recognize that there's an error. And that prevents the repetitious issues that we get processing from purchase orders and invoices, where you're managing the same item discrepancy over and over on multiple invoices for the same vendor. Here are a few of the monitoring and cleanup tools that we use between supply chain, AP, and anyone that's involved. In this slide, I've listed under Infor V10 the token IDs for the forms that we use typically for RNI, and the Infor Client Cloud Suite financial section is the description. The difference between Cloud Suite and version 10 is that Cloud Suite doesn't have the actual token IDs. It's all a description, as you see in the second column. And I've highlighted where I believe these reports and these tools can be of value within the organization, AP, the buyers, receiving, etc. In monitoring RNI, one of our key programs is PO 135. Now, this is where I talk about getting beyond the data. The PO 135 can be thousands of pages long, and it can be confusing to a lot of people. I've outlined what PO 135 is here, how it sets up, what's recorded in PO 135. And the thing to remember about PO 135, number one, it actually does the posting each month. It creates an opportunity for the GL system to then reverse the prior month's accrual and post the new month. The PO 135 lists inventory items, but doesn't actually post them with the running of PO 135. PO inventory RNI is posted through the IC 130, or in Cloud Suite journalizing, and the non-stock and special items are actually posted through PO 135. Now, this report is broken down into, as I said, it's thousands of pages long, but it's broken down into sections. And that's what you're seeing in that last bullet point under PO 135. It lists the inventory items, even though it's not posting those transactions, it's listing those items that are still outstanding in RNI. It posts and lists the non-stock items, the special items. And then the last section actually lists the transactions by accounting unit and account. And there are other reports that you can use to help out with the tracking of this. And the MA 531, for example, is valuable to the receiving folks. They don't necessarily have to have access to PO 135. In V10, it's just a report, a listing that you can print out to a CSV file if you like. In CSF, it's a searchable online listing, which you'll find very valuable. It's one of the key benefits, I think, to Cloud Suite Financial, is that you get this sortable list that pops up and you can actually filter, move columns around, and you can get in the data a little more easily. Some additional tools in the reference to cleaning up RNI are the MA 43, that's just the basic invoice detail. That's where if there was an invoice issue and you just had to go change an invoice, you could do that. You had a line on the invoice that actually hadn't been received or maybe wasn't even on the invoice yet. So very simple resolutions there, maybe some unit measure corrections. The MA 126 is an automated job that usually runs nightly that will pick up anything that can be matched and will match it. Most of you are probably using that already. Any receiving adjustments that have to be done, they're done in PO 33. IC 24 is used for those inventory transactions sometimes when the stock has already been issued out and you put in an invoice and then ultimately the invoice has a discrepancy, the discrepancy gets resolved. If that takes too long to occur, then you've got an item sitting on your shelf that has the wrong inventory value. And if you do a write-off or anything like that, you're gonna have to go back in through IC24, or there are other product programs you could use, but typically IC24, and do an adjustment to your inventory to correct for those costs that may have been caused by invoice discrepancy issues. The MA 180 is an opportunity for you to write off receipts. It's a way to get rid of your RNI. Unfortunately, it's not very specific, and you could end up archiving a lot of transactions that you don't necessarily want to archive. So be very careful about the use of that one. You do have the ability to archive receipts, specific receipts, in the actual PO20. So if you get to the line level, there is an opportunity to archive individual lines. So how to get beyond the data? That's kind of what the key is to what we're talking about today. We recommend that you're maximizing your EDI capabilities, get as many vendors on EDI as possible, saving time for not only accounts payable, but in some cases for purchasing as well. And you want to automate your or maximize your automation tools. Typically here we're talking about scanning and approving an approval system for invoices, just getting those invoices approved at a faster clip. And we want to push relevant data to stakeholders. So make sure that the people who are involved or who can impact RNI are aware of the balances there and the issues that are occurring in the system. Could be open receipts, could be invoices that just haven't been processed, could be any number of things that we described earlier. As I mentioned earlier, I always recommend the cross-disciplinary teams to get down, focus on these problems, work together as a team, keep that visibility up, keep people involved, and get into a flow, how to manage these things. And as you do find these issues, make sure you're performing routine system maintenance, correcting bad data in a timely fashion so that you're not repeatedly experiencing the same issues over and over. So that's our presentation for today. If you have any questions or would like to contact anyone at ROI, please use this URL, contact us, and we will answer any questions you may have. Thank you for participating today.